Hello, this is part two of basically how to do your own financial statement and how to keep track of your own finances. So this is a do it yourself, okay? Now you might remember we did this one yesterday. So I'm going to go over it briefly. Remember we said how you are going to arrange your financial statement to show exactly what your assets are. Now, we're going to assume it's a year later, and I'm going to show you how your financial statement worked out a year later. Here we go. A year later. How about this? Okay. Now we're going to talk about it. Okay. So I'm going to put this down here so you can keep track of things. But the first thing to know is that uh, your goal, of course, is to increase your net worth every year so that when you hit 65 or 70 or whatever it is you want to retire and be live on easy street like I do, you want to know that you have at least $1 million. And by the way, this is a very important comment. $1 million when I was a teenager was a crazy amount of money. It was, little orphan Annie, her stepfather was a millionaire. He could have helicopters, which was the thing in those days. He could have mansions all over the world. He could have servants. $1 million today, what is that? It's the average two-bedroom, nice house in a nice neighborhood in California, in Los Angeles, let's say. That's $1 million. Nothing special. Lower middle class. Okay. So keep in mind that when you see an advertisement that shows you how to have $1 million in 40 years from now, probably $1 million is worth what, $40 million in purchasing power today. Okay. Now the next thing I want to tell you is about financial advisors and financial people who give you advice on what to invest. Years ago, when I had a company that actually had several employees, the worst ones, the most incompetent ones who I fired, guess what their next job was? Independent financial counselors. In other words, I would not go outside for advice. No one does a better job of researching investments, making investments than you will yourself. All my financial advisors landed me in the, well, when a fly takes off from a handle, they say don't don't fly off the handle because you'll land in, well, whatever he was shoveling. Okay, getting back to my story here. All right, so do it yourself is my advice rather than having an incompetent uh, financial advisor. Secondly, inflation. Government loves inflation because if inflation goes up 5% a year and you look at your financial statement and you're way ahead, like I have in this state, in this sample, oh, you think, oh, I'm doing so well. The trick is, what is your purchasing power, huh? A can of V8 used to be 38 cents when I was in college. Now it's $3.80 or €3.80. You had to add, is that 10? Yeah, 10. 38 is now 380. Okay. So my net worth had to go up by a factor of 1,000% to add that 10. So don't be fooled by thinking that your net worth has gone up and you're richer. No, don't look at the dollar amount or the currency amount. It's your purchasing power that counts. Now, next, a little aside, when I was in a Wharton school a long time ago, the only class I ever flunked was Accounting 101. And that was the most important class I ever took and the most knowledge I ever got in my life. Because when I looked at a business or a property and I was somewhat competent in accounting, I could tell if it was a good deal or a bad deal. And later on, when I was making up financial statements like I'm showing you how to do, well, uh, I was able to tell whether I was ahead or behind because I knew that magic adjusted for inflation figure. See, so if you know your accounting, I would say if you can take an accounting course by mail order or in the community college, go take it. Okay, so I flunked it, but then I studied very hard. I went again, and then I got to accounting 102 and accounting 201, and finally, I can't say I was ever a good accountant, but at least I got through the courses with passing grades. Okay, now today I showed you, and last time, the most important two statements, which is uh, your assets and liabilities. Most of you people will only have one liability, and that is probably the mortgage on your house. That's if you're smart. If you're not too smart, you got a big credit card balance due, and you're paying 30% a year, up to 30% in interest. And so, my little bit of advice for you is don't have debt for consumer things. The food you eat or the cruise you take, anything like that is consumer. And you don't want consumer debt because that's high interest and doesn't make you money. But a mortgage on a home or some income property is very good because the mortgage amount, the purchasing power of your loan, keeps getting less and less automatically with inflation, while the value of your asset keeps going up. So, advice: buy real estate in good location where there's plenty of jobs, not in something that's going to become a ghost town. And, uh, and that should be your main investment. If you want an investment that keeps up with inflation, well, gold and silver has had a traditional return over the last 100 years of about 8% a year. But the real figure on inflation is close to 8% a year. So all that gold and silver does is keep you even, okay? Although on paper you may look like you put in 100,000 and 40 years later you got a million, but the million is the same purchasing power as the money you put in originally. Okay, so that is kind of the summary going back to yesterday. And now we'll talk about your financial statement a year after the one we talked about. This is going to be kind of a fast summary. Here was everything we put in last year. And you see, the biggest item by far was the house you live in. You probably bought it years ago for 50,000. Now it's worth, if it's 10 years later, it's worth on average 500,000. Where else are you going to make 450,000? Not your savings from your job. That's for damn sure. Okay. So now we're going to pretend it's a year later. Okay, cash. Well, that's, I think you should always have a lot of cash. $1,000 in cash for emergencies is pretty good. Even when I go on a trip, I keep $1,000 hidden. I won't say where, but I keep it well hidden on my person so that if the plane goes down in the ocean and I have to swim ashore, at least I'll have $1,000. And normally that ought to get me home from anywhere in the world. So $1,000 cash is nice. That's something to aim for. Banks, remember, you had 1,000, I think 1,000, yeah. You had 1,000 in the bank. Now you have 3,000. That isn't because your money went up. It's because you saved a bit more, okay? Nothing wrong with that. Pardon me. You start out with 3,000. Oh, now you have 2,500. Yeah, so your purchasing power has gone down. All right. Crypto. Wow. I'm going to assume you were a little bit lucky. You had 2,000 in crypto last year. Now you got 5,500. But crypto is kind of like the lottery. Huh. You never know. It may go up, it may go down, but remember, all crypto is basically, well, with the exception of Ether. Ether actually makes money, but almost all the other crypto is a Ponzi scheme. You put the money in and any money you take out from a selling has to come from new people putting money in. So I personally actually have some Bitcoin, and we've made out very well on it, but that doesn't mean I have absolute faith. It's no more faith than I'd have in the lottery. Okay, now gold and silver will keep up with inflation. Debit cards is just like cash. Stocks, the fact of the matter is, they, like gold, over the long run, have returned about 8% a year. Over the long run, a random sample of stocks. But I personally, and I'm not stupid, I hope I'm not stupid, my return on stocks overall has been abysmal. I'm down about a third from 10 years ago. Why? My big mistake was buying shares in gold mines. And they'd already gone down 50%, but they went down another 50% after I bought them and never went back up until the last few weeks. This is 2025. In the last few weeks, gold mine shares finally, after 10 years of being in the dumps, are catching up with the actual price of gold. Okay, so I'm not so keen on stocks. Pensions and annuity is definitely not the way to make money. But if you're a spendthrift and money burns a hole in your pocket, if you buy an annuity, then every month you'll get a check, and it gives you about a 3% return, which doesn't nearly keep up with inflation, but at least you haven't squandered your money. So if you inherit a big sum and you know yourself you can't hold on to it without buying a Ferrari or a Porsche that depreciates 50% the first year, all right, you can buy an annuity, but it's definitely not recommended. Ha ha. Now we come to the big one that I do recommend. And you know what I did all my life that made me a lot of money? I never bought a single family home. I always bought a building that had a separate, well, sometimes they call them a granny flat, or I bought a 3 flat building. I wanted a property where the rent from the other 2 units completely covered all expenses and the mortgage. Is that hard to get? Not hard to get if you get what I call distressed property. That's something that, it smells of cat pee. It needs a paint job. I don't go for something that needs a whole new foundation, but something that has the need for cosmetics. That's where you get a good deal in real estate. So buy real estate where it has a little bit of income, or buy your single family home and then buy extra income property. Now here you made this is average. In a place where real estate values have gone up, your 500,000 property is worth 650. So you've made $150,000. Could you save that from a salary? Even if you made 100,000, you probably spend 90 on living, right? So real estate is how you're going to get rich if you're an average guy. Obviously, if you're in any business or your expertise uh, allows you to take sand that you get for free and turn it into $1.50 wine glasses, sure, you make more money than you will on houses or on anything else. But if you don't have a going business and you have a nice job that you're happy with, buy real estate. And that is my summary for today. Okay, I hope you liked this video. It took a lot of work to put it together, so I want you to like it, subscribe, tell your friends about it, share, and comment. I love your comments, and I'll answer every single one of them. And beside that, I'll see you tomorrow because I'm going to have another exciting video for you. Boy, is it going to be good.